Scene script, have you ever pondered the question, why do the rich continually amass wealth? It's an inquiry that has probably entered your consideration. The response, more often than not, is found in the potent instrument known as investment. Investment is not just a trendy term tossed around by fiscal experts. It's a method that, when employed prudently, can blast an individual's affluence to astonishing levels. It's the craft of making your capital labor for you rather than allowing it to lie dormant in a bank account or worse, beneath your mattress. Picture a seed. Isolated, it might not appear significant, but plant it, nourish it, allow it to flourish over time, and it can evolve into a grand tree. That's the very heart of investment. It's about sowing your wealth in fertile soil, fostering it with consideration and perseverance, and letting it expand and multiply over time. But here's the twist. Not all seeds become grand trees. Same principle applies to investments. Making intelligent and timely investment choices is vital. It's not about hopping onto the freshest trend or emulating the masses. It's about comprehending an investment's potential, weighing the risks, and making well-informed decisions. Investment isn't a fast track to opulence, it's a planned and patient methodology to accumulate wealth. It's about harnessing the power of compound interest, diversifying investment portfolios, and grabbing opportunities as they surface. It's about discerning the market, the economy, and how different elements can influence your investment's performance. So why do the affluent continue to amass wealth? It's not just about having substantial money to invest, it's about possessing the knowledge, discipline, and foresight to invest cautiously and patiently. It's about realizing that investment is a marathon, not a sprint, and the most substantial rewards often come to those who bide their time. Affluent individuals don't just hoard their wealth, they invest. They make their money toil for them. They grasp that each dollar invested is a seed sown, a stride towards a prosperous future. They discern that the might of investment resides not just in the money invested, but also in the growth and multiplication potential it carries. For the affluent, the formula is straightforward. They comprehend the might of investment. In the video description, add the following hashtags: #investment, #financial freedom, #Warren Buffett, #Apple Inc., #risk and reward, #start investing. Consider the story of one of the greatest investors of all time, Warren Buffett. This name is synonymous with astute business acumen, insatiable curiosity, and a knack for spotting value where others may see none. Born in Omaha, Nebraska in 1930, Warren Buffett didn't wait for adulthood to start his investment journey. At the tender age of 11, he bought his first stock, and by the time he was 15, he already owned a small business. His early start and consistent investments laid the groundwork for the immense wealth he would amass. Buffett's investment strategy is rooted in the principle of value investing, a concept he learned from his mentor, Benjamin Graham. This strategy involves buying stocks that appear underpriced by some form of fundamental analysis. In other words, he buys shares in businesses for less than their intrinsic values. Buffett doesn't just look at a company's numbers, he dives deep into their business models, their competition, and their potential for long-term success. One of Buffett's most significant investments was in the Coca-Cola Company. In 1988, he began buying the company's stock, eventually amassing a staggering 400 million shares. Today, this investment alone makes up a significant portion of his wealth. But it wasn't just about picking the right company, it was about having the patience to let his investment grow. Warren Buffett's story isn't just about accumulating wealth, it's about the power of compound interest, the importance of understanding what you invest in, and the value of patience. His journey underscores the fact that investing isn't a get-rich-quick scheme. It requires time, knowledge, and a keen sense of the market's ebbs and flows. The Oracle of Omaha's life offers a valuable lesson to all of us. It demonstrates that consistent, well-researched, and early investments can lead to immense wealth. Buffett's story shows us the importance of starting your investment journey as early as possible. So let's take a leaf out of Buffett's book and start investing today. After all, the best time to plant a tree was 20 years ago, the second best time, now. Let's shift our focus to a company you might have heard of, Apple Inc. The story of Apple is a testament to the power of foresight and the potential returns of early investment. In the late 70s, Apple was just a fledgling company operating out of a garage in California. It was started by two college dropouts, Steve Jobs and Steve Wozniak, who had a vision of personal computing for everyone. Despite their limited resources, they were driven by an unwavering belief in their product, the Apple I computer. In 1977, Mike Markkula, a former Intel marketing manager, saw the potential in Apple. He invested $250,000 into the company for a 1/3 stake. This was a significant amount of money at the time, and many would have considered it a risky move. But Markkula had faith in Jobs and Wozniak's vision, and his investment allowed Apple to grow and develop the Apple II, which would become a landmark in personal computing. Fast forward to today, and Apple has become one of the most valuable companies in the world, with a market capitalization that has often exceeded $1 trillion. The return on Markkula's initial investment has been astronomical. In fact, if you had invested just $1,000 in Apple at its initial public offering in 1980, it would be worth millions today. But the story of Apple is not just about the financial returns, it's about the impact that the company has had on our lives, from the way we communicate to the way we work and play. It's about the vision of its founders and the investors who believed in them. It's about the risks they took and the rewards they reaped. The Apple case study demonstrates the potential rewards of investing in promising companies at the right time. It's a reminder that sometimes the biggest risks can lead to the greatest rewards. And it's a testament to the power of innovation, vision, and belief in the face of adversity. So, what's stopping you from making your own investment today? Fear of the unknown often holds us back. It's human nature to be wary of stepping into uncharted territory, and investing can feel like a daunting venture. But let me assure you, these fears are common and completely normal. One of the most common fears is the fear of losing money. It's true, investing involves risk. There's no surefire way to predict the market. But remember, with greater risk often comes greater reward, and the potential rewards of investing can far outweigh the possible losses. Then there's the misconception that investing is only for the wealthy. This couldn't be further from the truth. You don't need a fortune to start investing. In fact, a small amount invested wisely can grow significantly over time. Another fear is the perceived complexity of investing. Many people believe that investing requires a deep understanding of economics or finance. This is not the case. Today, there are countless resources available to help you understand the basics and make informed decisions. Some people are also afraid of making the wrong decision. It's true, not every investment will be a home run, but that's okay. Investing is not about always picking the winner. It's about diversification and long-term growth. Lastly, there is the fear of being too late. But let me tell you, it's never too late to start investing. Whether you're 20 or 60, the right time to start investing is always now. Overcoming these fears and misconceptions about investing can open doors to financial freedom and security. It's about taking calculated risks, being patient, and consistently learning and adapting. Remember, every investment comes with some risk, but not investing at all can be the biggest risk of all. The time to start investing is now. Imagine a future where you're not just scraping by, but thriving, where financial freedom isn't just a distant dream, but a lived reality. This isn't a fantasy. It's a potential future you can manifest through smart and strategic investing. Investing is more than just a way to grow your wealth. It's a path to financial security, a means to creating a more comfortable life, and a tool to build a prosperous future. It's about making your hard-earned money work for you so that you're not always the one doing the heavy lifting. Think of investing as planting a seed. Initially, it might seem like a small, insignificant act, but give it time, care, and the right conditions, and it can grow into a mighty tree, providing shade and fruits for years to come. Investing is just like that. Your initial investment is the seed, and with time and the right strategies, it can grow into a substantial nest egg, providing you with financial security and prosperity. Remember, investing isn't just for the wealthy. It's for everyone who wants to take control of their financial future. It's for those who want to break free from the cycle of living paycheck to paycheck. It's for those who want to create a cushion for unforeseen circumstances, or save for retirement, or fund their children's education, or simply want to live a better life. The world of investing might seem intimidating at first, but it doesn't have to be. Start small, start with what you have, learn as you go, seek guidance when needed, and most importantly, be patient. Remember, Rome wasn't built in a day, and neither is wealth. So take that first step towards your financial freedom. Start your investment journey today. Whether it's stocks, bonds, real estate, or starting your own business, choose the investment avenue that suits you best and start planting those seeds for your future. Don't wait for tomorrow. Start your investment journey today and you could be on your way to financial freedom and success.